audio. Boom, there it is. That was a nice little pop. You like that? There you go. Hey, everybody. Welcome to Consensus. This is awesome. I'm Zach Seward. I am a contributing editor at large here at CoinDesk, and I am your MC for Protocol Village today. Now, Protocol Village is super cool because it's where we get like a bit more technical over these next 3 days. And it's also for smart folks like you who are either developers, aspiring developers, or just savvy investors who know that it's all about that Steve Ballmer, right? Developers, developers, developers. That's where activity is in the ecosystem. That's where users are likely to flock. And so that's why we're super excited to kick off Protocol Village with a session by Electric Capital. We're going to hear from partners Maria Shen and Curtis Spencer about their annual developer report. Comes out every January. It's like a late Christmas present for the crypto community, and it really breaks down where developers are building. They look at open source code commits across a number of different ecosystems, and it becomes this big moment in the crypto space every January because we get to see, okay, what's growing, what's shrinking, what's going on. So the folks at Electric were kind enough to look at some fresh numbers. What they do every year is the preceding year, but things have changed. We've got some fresh data from 2023 that they're going to share to give us the present day state of the crypto developer ecosystem. So I'm super pumped, and I'm going to ask you to welcome to the stage Maria Shen, and then Curtis Spencer is going to come up and close out this session. So let's get a big round of applause for Maria, and we welcome you to Consensus. Thanks so much. Yes.
Okay, perfect.
Actually, yes, you can.
Okay. Oh, no, I get my own. Okay. Hey, everyone. Thank you so much for being here. My name is Maria, and I'm extremely excited to come talk to you today about open source developer activity in crypto. So, Curtis and I are from Electric Capital. Super quickly on Electric Capital, we're an early stage VC firm that only invests in crypto. We started in 2018. We raised $1 billion earlier last year, and we believe in hiring engineers and not analysts. So 70% of our team are engineers or former founders. And so suffice it to say, we pay a lot of attention to developers. Why do we care about developers? We believe developers are a leading indicator of value, and probably the most important leading indicator of value in crypto. Crypto is very unique in that it is open source, and that is unlike any other large and growing industry out there. So what does it mean? You know, Bitcoin is open source, Ethereum is open source, and that basically lets us look at two things. One, we have unparalleled transparency into the number of developers, what they're building, who they are, and where they're building. So are they building in ETH? Are they building in Polygon or Solana? The second most important thing is that when developers come in, they are building in the applications that bring in more users, as well as tools that bring in more developers. And so that's why we think they're a leading indicator of value. All right, so without further ado, let's go through some of the developer numbers, and then Curtis will come up here and tell you about our infrastructure, because it is no easy task to get these numbers. So here's where we are right now. These numbers are updated as of the end of March. Right now, there are 21,697 monthly active developers. This is my big caveat on the slide is that this is an undercounting because this looks at open source developers in crypto. So who's a closed source developer? Coinbase developers are closed source, Kraken, gaming devs usually closed source. So these are only open source contributors. Anyone who contributes in a 28-day rolling window period would be considered an open source monthly active developer in crypto. One thing that's really interesting that we've noticed is that monthly active developers increase along prices. And so you can see that over here in, in 2017, basically what we saw is that monthly active developers increased by over 8,000 to over 10,000 monthly active developers for the first time in history. And then in this last cycle that we were just part of, we had 15,000 more monthly active developers. And so we hit an all-time high of 26,323 monthly active developers June of 2022. What's interesting, though, is that when prices fall, developers tend to not fall proportionately. And so in the 2017-2018 cycle, what we saw is that prices fell more than 90%, but developers stayed flat. And then similarly in this last cycle, prices fell at this point more than 60%, and developers fell 17%. So right now, prices are roughly back to where we were in 2018 levels, but developers have actually, just from peak to peak, have grown over 2x and have not fallen off that much. But it's really interesting to start segmenting these developers and trying to see who stayed and who left. So one way that we segment developers is by looking at how often they contribute. This is a distribution of the number of days that developers contribute code over a 28-day period. So if someone who contributes code over a hackathon, maybe they do 50 commits over 3 days, they would still kind of fall basically over here. And we can see that 20% of developers contribute 10 or more days, and then 50% contribute 2 to 9 days, and then the rest only contribute 1 day. And roughly, we can put them into full-time, part-time, and one-time developers based on that kind of distribution. So a full-time developer is someone who's usually getting grant money, or they're working full-time in crypto. A part-time developer would be someone who's active in a hackathon, or maybe someone who's working on a side project nights and weekends. And a one-time developer we see is someone who's coming in and updating their wallet address for a validator or something like that, or making documentation changes. If we were to flip over and look at the number of monthly active commits, we can see that there's over 500,000 monthly active commits right now in crypto. And we can also look at who's making those commits. So full-time developers are making most of the commits. They commit 200 of the 500, of the 500,000 commits that happen on a monthly basis, 402,000 commits are from full-time developers. Full-time developers do most of the work. This is another way to look at the same data. So if you were to normalize the data, you can see that right now about 79% of all commits are from full-time developers. What's really also very interesting here is you can see that there's kind of these peaks and valleys that correspond with market cycles as well. And so during the 2017, 2018 bull cycle, you can see that the orange actually pushes into the blue, meaning that more part-time contributors are adding to the commits. And then same thing here in this bull cycle, you can see that part-time contributors contribute more of the commits. And this is because a lot of people flood into the space and they're participating in hackathons, poking their heads in, playing around. But then when the bear market hits, you can see that, as we can see the recent uptick, full-time developers once again take most of the work in crypto. So if we were to look at year over year, we've actually decreased by 13% in monthly active developers. And there's a question of who are the developers who stayed? Of the developers who left, only 36% were full-time developers, meaning that most developers who left were part-time and one-time developers. Full-time developers in general are more likely to stick around in a bear market. Another interesting way of looking at this is when a developer decided to join. So again, of the developers who left, about 50% came from 2022 and 2021, meaning 50% of the developers who left came in through the bull market. And then it's also kind of interesting to see 2018 as a high percentage up there as well, meaning that bull market developers who come in are a little bit more likely to leave once prices recede. So despite some of the developers leaving, though, we can see that there's still a lot of growth in the ecosystem. This is kind of an aggregated view of something we have on developerreport.com, which is a public good. We don't monetize any of this. Breakdown by ecosystem that you can see. This is an aggregated view, so I would recommend everyone go to developerreport.com to look at more granular breakdown. But year over year, you can see that Celestia, Aptos, Aztec, and Sui actually more than doubled the number of developers that they have. And there's just been a lot of healthy growth in terms of the ecosystems on this list. Another segmentation of data that we see, we kind of get questions around a lot is where are developers located? Crypto is very unique in that it's a very distributed ecosystem. People work from all over the world. And so one of the ways that we try to understand where developers are located is by looking at self-reported location. A self-reported location is what a developer chooses to put on their GitHub or on their Twitter. And so we can find that through their open source contributions and trace it back to their social profiles to figure out where they're located. About 1 in 10 developers have this kind of data. This is super interesting. The US is very clearly losing their lead in the share of developers. We started off with 42% of all developers were located in the US in 2018, and now we're down to 29% in 2022. It's a very, very clear downward trend line. And so, of course, this begs the question, how are the other regions in the world doing? The 3 biggest regions are North America, Europe, and Asia. But then if we were to break it down a little further, we can see some really interesting things pop up. Like India has roughly the same share of developers as LATAM and Africa combined. So how do these regions, developers in these regions compare if we were to look at it over time? So this is over time from the US, Europe, Asia, et cetera. One really interesting thing here is that Africa grew from almost 0% to 5% in 6 years. And India's share was the fastest. So they also grew from 5% in 2021 to 8% in 2022. And then again, I think it's really interesting to highlight, that there's a lot, while there's kind of flat or growth in other regions of the world, you can see that there's actually decline in North America and Europe. Another way to visualize this data is to normalize it. And you can see again that India, Africa, and LATAM are gaining crypto devs at the expense of the EU, including the UK and the US. So taking a step back before I hand this over to the infrastructure talk, I think it's really important for us to look at how far crypto has come in context. So we're now 14 years into the creation of open source crypto. This is Satoshi's first post where he open sources Bitcoin code. Always gives me goosebumps to see this post out here, but he basically says, hey, here's the open source C++ code for Bitcoin. This is from January of 2009. And I always think this is really amazing to look at because in 2009, we had 1 developer working in crypto. So monthly active developer was 1. And it took us 7 years to get to 1,000 monthly active developers by the time Ethereum launched in July of 2015. But then if you were to compare the first 7 years with the last 7 years, that growth is really incredible. We added more than 20,000 monthly active developers. And the amount of code that's being written in crypto now is becoming rapidly non-trivial. So if we were to just look at Ethereum, the number of deployed smart contracts has over 290 million lines of code, which makes it comparable to some of the largest software stacks in the world. All right. So that was a quick overview of the types of data that we produce. You can find out more on developerreport.com. But to go into a deep dive on how we get this data, I'd like to welcome Curtis on the stage.
Thanks, Maria. All right, there we go. Got the mic going. Thank you, Maria, for going over some of the data. I'm going to go over kind of going deeper into the belly of the beast here on how the infrastructure behind developerreport.com works, as well as the developer data itself. So we started doing this in 2018, and with the 2022 edition, we've gotten our infrastructure to a point where we can actually update the data on a monthly cadence. Ideally, we want to get it down to a daily cadence, but that's going to take a bit more work. You can now see the monthly data on developerreport.com. There's a QR code if you want to check it out. Would love to hear feedback. We plan to grow this. Right now, you can do the top 200 ecosystems, but there's about 6,000 ecosystems now in crypto. and so we want to continue to make the data better. This is a fun little iceberg chart of just like what goes into the infrastructure behind developer reports. So at first, when you look at our Twitter threads, the content we share with the mainstream media, it's pretty surface level. But when we go a little bit deeper, there's a lot of layers to building this data correctly. So from the architecture perspective, there's 4 main sections, and I'll go into each one. So we start with this open source taxonomy. This is a GitHub repo that we have out there where anyone can come and contribute to add a repository to an ecosystem, even add an ecosystem. It's much like Wikipedia. Right now that has about 2,000 commits where we show the data and people can update, say for instance, if you're making a change to the Ethereum ecosystem, you can add a repo if you're a developer. From that, once we have all of those repos, we need to build a process that pulls all of those code commits down from GitHub. And when we started this in 2018, it was about a couple of gigabytes of data, and now it's getting into terabytes of data. And I imagine over the next couple of years, if the developer growth trend stays the same, it's going to be petabytes of data. Next up, this is a really important part of the infrastructure, and it's the data deduplication pipeline. When you look at all the code in crypto, there's a ton of forks, there's a ton of people that just copy and paste code. And so to actually figure out where novel code is written, you need to write some code that figures out, hey, this code came from Bitcoin, this code came from Ethereum, this code came from Compound. Because there's so many people copying code in the space. And it's not a bad thing per se, and I'll go into why it's not a bad thing. But it's really important to actually get accurate data here. So next up, once we have all of this deduplication, we flow it up into the data science part of the report, where we generate the charts and the yearly report. One second. So next up, I want to dig into the ecosystem taxonomy portion of this iceberg. It's an important public good with participation from almost every ecosystem in crypto. So it's implemented as in a GitHub repo, and anyone can just contribute a pull request. I don't know if anyone in the room has, but there's about 300 contributors to it, and we've had over 2,000 commits over the last 4 years. There's some rules to this taxonomy, and it gets a little complicated, but the idea is we have primary developers and multi-chain developers. And primary developers are developers that work exclusively on one ecosystem. So take, for instance, like an Ethereum core developer or a Filecoin core developer. They're often like working on that like base layer of the protocol. And then multi-chain developers, on the other hand, are those that work on applications that span multiple ecosystems. So like some common examples might be Uniswap or Sushi, that dApp developers that are working across different EVM chains or non-EVM chains. Let me show you a concrete example here. So for Sushi and Optimism, for many of these dApps, you'll see like a Sushi dev build and deploy on many protocols. So the primary ecosystem for Sushi is Ethereum, because that's where it started and that's where the governance resides. But they also deploy onto various L2s and EVM compatible chains. So when you look at Sushi from the Optimism perspective, we would count the Sushi devs toward Optimism's multi-chain community. And then when you look at something like Optimism directly, at the base layer you have the core Optimism developers, and then you have protocols like Velodrome, for instance, that are deployed exclusively on Optimism, and those would be counted toward Optimism. And then you have things like Sushi, Uniswap, Aave, which would then get counted toward Optimism's multi-chain developers. So tracking these ecosystems, it's a constantly moving target. Like even since we shipped the yearly report, there've been like hundreds of protocols that have been launched and deployed on different chains. So we're always like moving around the taxonomy. It's kind of like gardening. So I'm hoping the next few charts are going to be pretty bullish on like just why the crypto developer community continues to grow, especially in the bear market, as Maria mentioned. So even since 2018, we've seen about a 25x growth in just the number of code repos that we're tracking, a 10x in the number of commits, and a 6x in the number of ecosystems. And while the growth is interesting, the more interesting trend that I like to see is just like the richness of this data. So each of these circles here is an ecosystem, and it's sized by how many repositories and developers it has. So this was in 2018. So you can see Bitcoin and Ethereum are those circles that have circles within them, which are sub-ecosystems. So it's a pretty like low-depth taxonomy. So fast forward to 2023, the multi-chain future is clearly here. We have about 6,000 ecosystems, but many of them have their own like burgeoning ecosystems within them, right? Like dApps that are building on those layers. So things like Ethereum, of course, Bitcoin, Cosmos, Polkadot, Solana, to name a few. So closing out this layer of the stack, the ecosystem taxonomy, it's a public good that we're going to continue to maintain, hopefully with all your help, and allows any participant to continue to suggest changes to that data set. And there's a lot of consumers of this data set in the ecosystem. So we have a lot of foundations pull data from the taxonomy to run their own reports. And there's a lot of third-party alternative data providers as well. So next up, let's go a little deeper, and I'll talk a bit about fork detection and code deduplication. So first off, what is a fork? So a fork's not unique to crypto. It's very common in the open source software realm. Like you see, there's a lot of Linux forks where people take the Linux kernel and create new versions of it. And it's not a bad thing at all. It actually allows you to build on a strong foundation and make tweaks to protocols. So because in crypto, forks do have this bad rap because it implies that someone copy-pasted code without doing any real work. And then the real innovation lies with the original code base creator. But I do think there are many positives here, right? Like using that robust audited code base as your starting point can help you organize your code and experiment with a lot of different changes. You can do new consensus mechanisms, new token economics. So you look at something like Dogecoin, which is a fork of Litecoin, which is a fork of Bitcoin. They were able to experiment with a lot of the token economics and make a meme coin and have a lot of fun with it. They didn't have to like reinvent the wheel multiple times. So when we look through all the code bases in crypto, we see a lot of trends. A lot of Bitcoin forks, a lot of Ethereum forks, Uniswap, Compound. It's definitely not a bad thing, but it's something that we have to be mindful of when we're trying to create an accurate report. So I'll give an example here. So here's something if you took the original repo and forked it twice. If you look naively, it would look like, wow, there's a ton of developer activity for all of these code repos, right? But then if you apply some fork detection, you can see that fork 1 is a low effort fork where they've just made a few changes, but most of the code was in the original. But fork number 2, you see this quite often where, yes, it has the same lineage, but there's a lot of novel code built on top. And you see this in a lot of the Ethereum client diversity efforts where they often forked from the original Ethereum code base, but then have made a ton of changes underneath the hood. So lastly, as crypto continues to grow, it becomes a bigger part of the entire open source narrative, right? So while we only cover about 500K repos in our taxonomy now, we crawl millions to determine this like fork analysis to try to see which aspects of crypto are flowing into broader open source and which open source efforts are going into crypto as well. So maybe just a last layer that I'll go into, and feel free to come find me later and I can chat about any of the other layers if you're interested. But this is some alpha leak on what we're doing for future reports. So over time, we do think the source of truth will move away from these centralized sites like GitHub and GitLab to a blend of on-chain activity and off-chain code development. Like I think it's one of the interesting ironies of the space that almost all of us collaborate on Microsoft products to build decentralized systems. And what I'll show here to end the talk on is just looking at the number of verified contracts just on Ethereum alone. And we're starting with Ethereum, but we'd love to track on-chain activity across all the chains. This is amazing growth we're seeing. These are all verified contracts that are deployed on-chain. I think it's really only scratching the surface of where on-chain development goes in the future. So with that, I want to thank you all for attending the talk. And if you haven't, check out developerreport.com. Thank you.